everyone, it's Alissa Coram here, and welcome back to Monthly Market Report for February, where we will be going over January performance and breaking it all down with our special guest each month, hedge fund manager Jim Roppel, founder of the Roppel Report. And, Jim, December, which we talked about, had a lot of twists and turns, and it looks like January is keeping with that theme. Lots of twists and turns to navigate.
How you doing, Allie? Great to be here. And we have incredible amount to talk about. Wasn't expecting the fireworks like we've had.
Yeah, absolutely. We've got a lot to get to. So let's talk about the performance for January and where you see things now. So we will kick things off with some charts. We love looking at charts. We'd be lost without them, right? So here's a look at the NASDAQ composite. We'll go to the monthly here. For the month of January, NASDAQ up 1.6%. The S&P 500 also up on the month, 2.7%. And, it was a roller coaster, I guess a roller coaster higher. But if you take that step back, going back to mid-December now, we've been in a very choppy environment. And it seems like three major themes. We have the Fed, we have AI, and now we have this tariff situation, throwing some curveballs here for investors and not making it easy on us. What do you make of it?
I believe that all these things are good. And I think we're in a trading range. There's clearly a lot of choppy action, but the new administration is proving to be very much like they were last time, where they have a lot of market impact. And I think, I listened to Elon Musk and Vivek last night at midnight talking about the improvements in Doge. And Elon flat out said, it's such a target-rich environment for waste and outright fraud that we are probably going to be able to remove so much out of the budget that the government's going to have to sell less bonds. And it's going to be deflationary because rates are going to come down. I mean, the impact, imagine cutting so much of waste and fraud out that they're going to sell less bonds. And then he's like, there should be no regulations. Well, let's let capitalism fly. We've had 100 years or 200 years of regulations and very few removed. And if there's one that really needs to be needed, we'll put it back in. But let's let the golden goose rip. And I mean,
I was about to say, that's music to your golden goose ears, right?
Very much. I mean, well, the goose has needed a lot of Kevlar on the underside because there's been a lot of shots at him lately.
Yes.
But he's a hardy beast.
Okay. Oh, so in terms of what this means for investors from a day-to-day perspective, again, it's not just, all right, watch out for the AI stocks. We've got these cross currents here. We've got a bullish backdrop, but in the short term, it's pretty tough for traders. I think especially buying strength. New buys recently have been tough. And it's not just, all right, we're gapping down and we're continuing to go down. It's, you have a weekday, then a recovery for most of the week. And then this week you have a week open and then a recovery into the close on a switch in some news with Mexico tariffs being delayed a month. And now it looks like news out after the close today, Canada tariffs also on pause for the short term. So there's a lot to digest and a lot to navigate. Even if you do have a longer term perspective, how do you navigate these landmines in the short term, Jim? I mean, last Monday was really tough for a lot of growth investors with the AI bloodbath.
It was an absolute black swan asteroid into the environment that no one was expecting.
Yeah.
But look at where the index is. NASDAQ's 3% off of highs. S&P's within 1%. Dow's 1%. S&P's right there. I mean, the market today was a great support day. Phenomenal. NASDAQ's trading between 1,800 and 2,000. I mean, I think the market is healthier than you would expect based on the headlines. But I don't know. I'm really optimistic, but if you're a true can slim practitioner and you concentrate big, it forces you to become short term.
Mm,
And I would really prefer to be more thematic. I'm balancing. I'm trying to almost transition from holding like 4 or 5 giant positions on margin down to 10 less size, no margin, and then when the market gets red hot, then throw the accelerator down and use margin. Because remember, if Druckenmiller compounds at 30%, and I'm no Druckenmiller, if I could just compound at 18 or 20 without sweating bullets because I don't have these monster crazy positions on, and then, really hit the juice, but it's right now is not a time to be, it's almost more mean revision than buy breakouts right now. But the market's in great shape. I mean, really, really good. Like, look at uh, IBKR, please, or Goldman Sachs, or both of them. Okay, these stocks, IBKR could not be any more bullish, or Hood. These stocks are reflecting the health of the broad market, the global economy. Now, Nvidia is in a no-go zone. It is broken down. It has
mhm.
lost its leadership to Avago. It's living below the 200-day. And I find it almost impossible that I would say something like, oh, I can't believe I'm going to be bullish while Nvidia is cracking, but I am.
Right.
The market's not cracking. It's not the king. It's lost its crown. It's no longer the king. Um,
So move on.
yeah,
Yep, I have.
the market's not caving in. It's choppy, but through 2000, it's on
You're
the Nasdaq.
20,000 for the Nasdaq.
Sorry.
It's on. Yeah,
Yeah.
I mean, that's definitely a key level to watch if we can break out of that. Um, so Jim, clearly there has been a seismic shift, I would argue, in the landscape, especially when it comes to these AI stocks. Any actionable wisdom related to how to handle some of these individual names? You talked about NVIDIA. Move on. It's broken. What about for some of the other ones, maybe in more of like the AI adjacent utilities space that gapped down and then tried recovering last week? Are you staying away from those? How patient have you been? And talk to me about your updated hedging strategy with any of the AI related stocks, which have seen a total shift, I would say, especially in the chip space over the last week.
Okay, the critical issue is the time to have your plan in place for the black swan, which get used to them. They're never going to stop. Although this was really, really a big one. And there was
Yeah.
nearly the only precursor was how Nvidia was cracking on the Friday before. It knew, the market knew A lab was breaking, downside bearish engulfing candle. But there's a difference between panicking and executing a well thought out plan when the market's closed. So if you sold a net or Nvidia breaking the MAs on monster volume, that wasn't a panic. That was a well executed plan. Now you might regret it that ANET has held above the 50. It's recovered pretty quickly. And I just want to sidebar,
Sure.
liquidity and killer earnings never go out of style. The names that struggle after these bad breaks and the names that get destroyed are no earnings growth, low liquidity. So if
NVIDIA, the
you're,
exception.
yeah, well, Nvidia, yeah, it is. Now that's a clue. That's a big clue.
Mhm.
Nvidia is below last Monday's break. Or
Yeah.
well, let's see. Okay, it is really struggling where a lot of these other names are coming back, but the major guardrail is the 50-day moving average. A violent break below, and I mean heavy volume is violence, is a major sell signal. I mean, I'm a dimmer switch. Like through it, I'll
Mhm.
I'll throw out 15%. Another 3/4% down, I'll throw out another 15%. I used to do 10, and Bill's like, you gotta get a little more aggressive. 7, 15% will get you out. Um, if you
So
just
you're
do those,
saying in terms of tranches of selling the
yes.
position, 15% of your position out the door at a certain threshold, and then you go from there if it continues to deteriorate.
Right. And in the end, always, always, always live to fight another day. Now, on the Friday's reversal in NVIDIA prior to last Monday's break, I put some significant hedges on. As
Hmm.
a matter of fact, they were so significant that I was afraid over the weekend that we were going to open up. And unfortunately, they were woefully inadequate. The market
Hmm.
just broke right through my short call strike prices. So, you know, risk management is not just cutting losses, it's position size. Price will hurt you, size will kill you.
Yeah.
For me, I'm not the cowboy I used to be. 18%, 20% is really at the upper threshold of where I can go. But I have responsibility to other people. It's not just me anymore.
Yeah, exactly. So for stocks like ANET, you're saying if someone, and this was one that I was in, and I was feeling great about it until until last Monday, but I ended up in two pieces. Not 7 pieces or 10 pieces, in 2 pieces. I ended up selling it all. But it still does feel broken to me. And maybe it sets up again, but I don't have that sort of guilt. I've moved on. But when it comes to stocks like this, do you have a max sell? Like, do you only sell 50% of a position in one day and then wait to see, especially if it's on a Monday, and then you wait to see what happens the next day? Or does it just depend
It's a
on the stock,
matrix.
the size, the decline, all of that?
There's a matrix of many variables, largely how heavy are you in the market? How big is
Mhm.
this position?
Right.
How big's your cushion? But
Yep.
I'll tell you, I was a little ahead of the curve here because on the Thursday, a couple days before the bad break, it exploded way
Yeah.
right there, right where you're drawing.
Yep.
It was that was the largest historical
Extension from
distance,
the 50.
and I shorted a whole bunch of in the money calls deep. And I was very I had no clue, but it didn't matter. You get over the recent historical level of extension on the 50 because my positions are so big, I
Yeah.
have to hedge because you know TMLs are going to address or come down to the 50-day 4 to 5 times per year, and
Hmm.
that's just normal.
Yeah.
So
And that's
it,
this person. Look at this personality here. I mean, but that
it
was
is
pretty violent. I mean, so many stocks down, what, 20% plus in
from
massive volume
30,
in one
30.
day? Yeah, 20 to
Credo,
30%.
A-Lab, VRT, they were obliterated.
Yeah,
Um,
just a lot of destruction here.
you cannot expect you cannot you have to plan for everything, but the
Mhm.
reality is, I don't know if I've ever seen a break from highs like that in a sector ever. I've seen it many, many times in bear markets, over tops, where the leaders just get shredded, and that's normal. But this was not a normal break. It was an unusual um, occurrence. But I think you have to ask two questions. You have to be a free thinker. Number one, is it possible that the Chinese did all this with that little? Yeah. Is it likely? No way. I think this whole thing has actually created greater demand for GPUs, greater demand for energy. I think it's accelerated the race. It is on.
Mhm.
I'm actually shocked it took the Chinese this long to get involved. I mean, where have they
Yeah.
been? I
Well,
mean,
I'm I do think approaching anything with skepticism is important, and making sure you find out more information. Wish the market would have felt that way on Monday, but that was not the overwhelming sentiment come Monday, even with folks trying to digest this over the weekend, Jim. So definitely a very rare situation here.
but there's one other thing I didn't say, or maybe I did. Always, 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 always live to fight another day. There's going to be 15, 20 TMLs every single year, probably for the balance of our lives. So there's more fat pitches. The golden goose is going to keep whipping them at us. And if you lose your capital base, you can't you cannot engage. You can't gentrify yourself. So guardrails 357 from cost through the
Mhm.
50-day, hedge your extensions and breakdowns through the 50 on volume. That in itself has kept me in business for 40 years.
That's pretty gold right there. And when you say 357, you're saying 3%, 5%, and 7% below cost.
Correct.
Yeah.
I sell a third or 33%, 33,
Mhm.
33, and I don't even wait for 7. I
Yeah.
mean, when I first started listening to Bill, it was 7 and that's it. And then I
Yeah.
went to 3, 5, 7, and now it's like at 5, I'm like, there's something I misjudged the chart. I read it wrong. There's something happening. I'm out.
Mhm. So, Jim, to sort of wrap up this section, how do you think that it's going to play out over the next couple of weeks and months for some of these stocks? Obviously, we'll find out the ones that bounce back versus the ones that don't. Like we're already starting to kind of see unfold here. But do you think for the strongest names of the bunch, where this was just sort of a short term overreaction, that we need to see full on bases forming? Or do you see more aggressive entries here in the short term? Or would you wait for the dust to settle and for these charts to digest a bit more?
At this minute, I'm off margin. The volatility is extremely high. Again, we have the same regime we had, in the prior administration, last Trump administration. You have to expect more of this. I mean, he's going to come out and attack industries. He's going to say pharmaceutical prices have got to come down, and those stocks are going to get shelled. So I'm playing for the environment we're in. I am not super aggressive. I'm still very long, but the names I'm going to let them tell me. I mean, if the Nasdaq goes through 20,000, not 2,000, and my names continue to hold up, look, if we're going to have V-shaped bottoms, upside reversal is the only way to play. If you wait for a whole new base to form
Mm.
and we get through 20,000, they're going to go without you. So it depends on how invested you are. Like if you have, all cash, you better be ready to you have your buy list. Another thing, always have your buy list fresh. So
Yeah.
you're not debating what's best the
Mine's
day
definitely
of.
changed over the last week. Jim, when we had the show last month, we were saying, okay, the next episode, we're going to go over some top ideas for 2025. How much did your list change from last week to this week
I
for top
lost
ideas? I lost a few.
my single best idea, the one I picked, like if I was Cubby Bear stock contest, I would have
Yeah.
used A-Lab. And
Okay.
A-Lab has been a little fragile. It is uh, it's
Yeah.
not really in gear. And again, even buying an upside reversal below the 50-day is a danger zone. Anything living below the 50 is very iffy merchandise. And if this is going to become a monster, it could be 400 in 18 months. So don't sweat. I have to get do not FOMO.
Yeah.
Again, it is the composite rating has come down
A
10
lot.
points.
Yeah.
Um,
It's an 89 here. Plus, now we have earnings in a week. So let's see. Let's see what earnings are like. Can it get back in gear? Can it get back above the 50-day? Can it close above the 50-day? Let's see. Let's see if
wait,
this
wait. What's your
can start to
favorite pick?
repair. You
What's
know
your
what? My two were I promise you this is my two were going to be A Lab and GEV. But I had to and I owned both of them and sold both of them last week.
I think GEV looks better. I really do. And here, this is really important. 99 comp, high 90 RS stocks are almost never not extended. They're almost always extended. So this could be an opportunity for us to get some rebasing action
Yeah.
and get into some of these elite leaders that are only buyable a few weeks a year
Mhm.
in size. Almost everything else is an add point. So this is
That's
really
so
an
true.
opportunity,
Yeah.
hopefully.
Yeah, we'll have to see how these digestions turn out over the next couple of weeks. I think it was also very telling the stocks that held up last week, right? And even today, they're definitely you could tell which ones, okay, these have sensitivity to some of these issues that we're seeing out there, or are they holding strong and look more like those elite stocks? So, Jim, I want to talk to you about your new ideas or your top ideas for 2025 because I feel like that's a really great segue. But just to sort of tie things in a bow here, it's in terms of the general market environment with the chop that we've seen. It seems like now you are favoring diversification among themes diversification among leadership, and really keeping in mind position sizing and not being super eager right now to go on margin.
I'm always cognizant of position size, always, always. But there were so many AI leaders.
Yeah.
I was over committed to that sector. But
Yeah, I
we
was too.
we have a very rich market here. The breadth has come back, and a week ago today, the internal breadth was good. It was
Yeah.
really only AI that got blown out.
Yeah,
And
RSP was up that day.
it I was really, really wanting a handle at that point on the indexes, and instead Nasdaq we got a bad break. So it may have delayed the
Ah,
satisfaction.
yeah.
But did you ask me what my best? You
I was just confirming the strategy
Yeah,
here. So
I
diversification, focus on size, and yeah, let's talk about some ideas.
I do think that you have to be diversified amongst industries, but you have to remember when the market cracks really bad in a broad market decline, it's all growth.
Yeah.
All growth goes. The restaurants, the semiconductors, the software, it's just a matter of what sector triggered it, and they're probably going to get hit a little harder. But
Mhm.
I'll give you my I don't want to give all my ideas away because my subscribers will be pissed at me, but I
Some
think Reddit is a 99.99 comp. Fundamentally, their business is an absolute goldmine treasure trove of data to be trained to use for training on large language models that almost no one else has. They have a unbelievable average daily users. They're just turned profitable. Management holds, I think, 13% or
let's take a
20%.
look. 19%.
19. That is really high. And then, okay, weekly wall of blue
Yeah.
accumulation, and then skyscrapers of blue. It is a little fragile in that when it came out of its recent digestion, the digestion was loose, the digestion was short, and it also had a lower volume on its way out the top. So it is a fragile new high. I would not be shocked if it gave it up, especially if we get a deeper pullback in the market. But they just came from losses to a monster earnings beat, a thunderous beat. They're now profitable. It's just it has everything I look
Acceleration on the top line as well.
an acceleration. That was one of Bill's favorite, the accelerating earnings line. It's just a 99.99 comp TML royalty, uh, and it's proving itself. It's not an opinion. Like I always want to know the fundamentals, but I don't need an analyst to tell me this is a great stock. The
Yeah.
price tells me everything I need to know. Now, the huge insider ownership does not insulate you from gaps down. It insulates you probably from fraud or in lack of being complacent. But this thing, it is not viable right at this minute. It might be an
Right.
ad through the highs, but again, I missed this at the very lows when it came out at like 40. There was one day when it was buyable down there
Let's
because I
go
just
back.
didn't think it had a hand. I didn't think it had a handle, in my opinion. But there was one day where the volume did come out, and I was not in it until much later. But again, there's a target out on it by some analyst, and it's like they clearly do not understand the history of TMLs. If this stock's going to rip, a 10 or 15% advance is like that's a day's work. This thing's could go to Mars. It has the horsepower. It's the right size market cap. It is semi-liquid. There's a lot of other really good names that are much bigger, but they don't have the horsepower under the hood.
Mm.
This has it all. So anyway, how about this? You
Yeah.
tell us your favorite.
All right. So you're saying for Reddit, it's got all the makings of a true market leader. It's acting like a leader. Just wait for a new entry. Unless you already own it, then maybe you can add to it. We do have earnings coming up next week. So that's something to keep in mind about new positions and risk management there. I was just also going to add here, Jim, that at least in the short term, I think for me, for top stocks, there's and I I already thought of this earlier this afternoon on our Stock Market Today video. So for those who watch that, you're hearing me repeat myself, and I'm sorry about that. But for top stocks, I want to know how they traded on December 18th. That was that Fed day. So let's check it out. All right. Down, but the volume here was basically just average, and it held above the 21 day. Then the AI day, okay, down less than 1%, volume also light. And then today, reversed higher, closed up. So I feel like those sort of three macro issues that we have right now, Fed, AI, and tariffs, this stock has weathered those storms pretty well. And these are all themes that we're going to continue to get headlines throughout the year. So I feel like there's some resilience here for the stock.
The first thing I did this morning when I saw what was going to happen is I got my yellow legal pad out, and the first stocks to go positive on the day,
Mm,
I was writing them all down.
yeah.
I mean, they're leading. They're showing power.
Yeah. Huge clues.
So basically the same thing.
Yeah. Well, I don't own Reddit, and I do wish I would have bought that cup with handle breakout, or maybe even made an exception and chased the earnings gap. And I know it's earnings season. Let's circle back to your thoughts on earnings gaps and that sort of thing. Maybe that actually is a good transition. We'll talk about it now. Palantir. This is one that I own. Wow, it's up even more than the last time I looked at it.
It's
It's
over
up
100. Wow.
it's up 22% now after earnings, Jim. And I do own it, full disclosure.
I think I didn't love the way it advanced up off of 63. I didn't see a lot of high volume accumulation,
Mm-hmm.
but I'm in the position. I think we've had a lot of great earnings responses this so far this season. A couple,
Yeah.
Apple was really, really bad,
Yeah.
but for the most part, I think unless your position is,
Twilio, that
yeah,
was
look at Twilio and look
team.
at it
How's that one
held even after it's holding really tight post.
doing? Netflix, I'm
Netflix,
sort of drooling over this one right now.
and that's an AI beneficiary, not a provider.
Yeah, I feel like it's definitely. I mean, if it was exposed to AI in a negative way, it would have shown up in this chart last Monday.
And look at how tight it
Barely
is.
budged. Yeah,
That's just really, really textbook post. That's
yeah.
great stuff right there.
So that's a top watch name for me right now. But earnings gaps. Tell me your thoughts, Jim, in general about how traders should be looking at earnings moves and uh, reacting to them.
It's probably the biggest earnings season gives me more ideas than almost anything. They're actionable that minute. When you screen for TMLs, you can come up with a whole bunch of them, but when you get that volume horsepower just showing you this is the one. And by the way, there's an analyst, Jeffries, where I domicile my hedge funds. They have a $28 target on Palantir. They are
Oh wow.
so clueless about what TMLs can do. I mean, the life-changing power here. And now it's over. It's north of 100. Gap up on earnings in after hours by 20% of your position. Pre-market the next morning, if it's holding it or above, add a little bit, like 10% more. But always wait for me. Now, this is a conflict because you don't want the stock to get too far ahead
Right.
of your cost, but you also don't want to get too much on until you're past rookie hour. Okay.
Hmm.
You have to get past amateur hour because the market fades, general market gaps up and down, and stock gaps up and down.
Hmm.
So after the first hour, if it's still up, buy another 15, 20%. At
Of your
noon,
of your total position. So if your total
yes,
position was 10%, is that what you're saying?
yes.
10% of your portfolio, you start with, what did you say, 30% after hours or
In after
20%?
hours. This is an after hours only, okay?
Okay.
Because after hours is very tricky and you frequently get fades and reversals, okay? You have to listen to the conference call, maybe buy 5% more after the conclusion of the call. But in the normal markets, not on a normal breakout, I want 50% of my position on first trade, one block, okay?
Okay.
But in after hours, that's too risky because the likelihood of a fade is much higher. So you build it over a greater period of time.
Okay. So potentially buy a little bit after hours here, but if you wait until the regular session, what do you want? You want to see the first hour of trade, or hey, first 5 minutes, buy a little, then 50 up up to 50% of your total position.
Probably
Then
within
see
the
how the
first
first
hour of
hour.
trading, you wanna get 50, 60, 70, 65%. And then if it closes, dead top tick,
Mhm.
all in. I mean, all in on your position.
Yeah. Yeah.
And then if you see action like Nvidia, I'm sorry, Netflix, where it goes dead tight like that,
Mhm.
over 1,000, again, a large Livermore pivot at 1,000. That is a top off with just now you're really going to go for it. Throw another, depending on who you are, what's your personality, what kind of
Yeah.
risk are you involved in, between 4 or 5% and 15% more. But by
Right.
that point, you're 20, 25% into this thing.
Yeah. All right. Well, there
Now,
it sounds like there's
if that doubles, you move the needle on your account for the year.
yeah,
Now you get 3 of those and you're up 75% for the year.
right.
You got to subtract out your losers, but
Mhm.
it doesn't make sense to put 2% of your account in something that's going to double. It doesn't even move the needle. And
Right.
how often do you get a double or a triple?
Right.
So when you do, you better make money.
Yeah, I think that's the trade-off, right? Having that diversification, but still meaningful enough concentration where it will move the needle. So that makes sense, Jim. So I like Palantir. I have a couple of other, I trimmed back a lot of my AI exposure last week, but a couple in my portfolio right now. So I guess I'd consider them top ideas that align with what you have. Dash. And I can tell you, Jim, I've been sick the past two and a half weeks. I haven't used DoorDash more in my life than in the past 2 weeks. It has come in handy, and I feel like a lot of other people out there could relate.
You
So,
needed to get some soup delivered to your door.
yeah. Yes. Soup, it's my husband, it's busy season right now. He's taking care of everything. He's brought it to me, brought me my medicine, brought me all the things, but, I've had the deliveries, and that's come in handy. So I've been in this one since last fall, and I really like how it's been acting lately. The Monday bloodbath, this one barely closed down and closed up on the day today. So a little extended here, but Jim, it seems like you are a fan of Dash here as well.
I don't like it. I love it. I think one of the most important metrics that no one talks about is the liquidity to earnings growth ratio. This is one of the most liquid stocks in the market with a 580% estimate this year. The other stocks, well, Nvidia is out of the running at this minute,
Yeah.
but this and TKO are the
Hmm.
highest liquidity with monster earnings growth. That ratio is the golden ratio because if you're running a billion, 2 billion, even 500 million or more, where can you get the liquidity and the highest earnings growth? You can't buy some of these smaller names. So these bigger liquid names with high earnings are the institutions are going to crowd in there, and the fundamentals are. You said to me, the consumer or the convenience economy.
Yeah.
It's now an expectation to have the food brought to you,
Right.
not just when
Right.
you're ill, just in general.
Yeah.
You're too busy.
Exactly. It's opportunity cost, right? Yeah. Could I spend an hour running errands, or could I spend 5 minutes? This is what I need from the grocery store, and then keep working or work out or do whatever else I need to do. So I feel
And
like that's becoming more of the norm, especially for my generation, but others as well, Jim.
And there's one more we got to add on. We got to look just a little forward. What about when a robot brings it to you? Why would you have a human do that?
Yeah.
We are, Tesla said late this year or this summer, Austin will have robo taxis, no driver. I mean, this is going to be pervasive.
Mhm. Even Uber's CEO has said he had an interview with the Wall Street Journal the other week, and he even said in the long run, being an Uber driver, that's not going to be a job forever.
Well, I mean, the largest cost of driving a truck or a car is the driver, the insurance. And by the way, it's 700 times safer to have a robot. It's negligent for a human to drive. We're on our phones, we're emotional, we get angry, we road rage, all that stuff. Robots don't do that. They just get you where you're going at a faster rate of speed, safer. It's going to be negligent to drive a car by yourself. DUIs are gone. Thing of the past.
Mm. It'll be interesting to see how this rolls out in the urban areas. I know in places like New York City, for example, I mean, they've got the couriers on the bikes whizzing in and out. I don't know. Are we going to see drones and the little, I don't Meals on Wheels kind of
Well, the cars,
robots?
they have them at
We'll have to
SMU.
see.
They
Yeah.
have
Oh, they
the
do now?
parts that they on campus, they play music. They
I
play
love
rock
it.
whatever, and then they deliver food.
We just need people to be nice because I have seen videos on social media in LA, for example, some not so nice people destroyed a Waymo car. So that's not very nice. But in general, we'll have to see how how robots will change deliveries. But DoorDash, another one, has earnings coming up. So we have valuable information from stocks that have already reported. This is one that has yet to report. It's a little extended heading into that. As for me, I was adding as it was coming up the right side of this base, Jim. But is this another one in your view? Hey, if you don't own it yet, see what the earnings report is like. Wait for a new
Um,
setup.
it's extended here. I don't think you could add certainly over Allie's downtrend line for sure. You could add a little bit or backing up off the 50, like the day she pointed out for sure. But it's too extended here. Again, if I held it, I would go in personally. I would, maybe not for you on your risk tolerance, but without any hedge. The market has been responsively good to good earnings, I think.
Mm.
And I hear this all the time. It's extended. I hate when they're extended going into earnings. That's a signal that it's good.
Yeah,
I don't want to have
more
stocks that are
cushion.
acting, yeah. I don't want stocks that are acting poorly going into earnings. I don't want to do that. But this is look at Palantir.
Hmm.
People are like, oh, it can't go higher. It's extended. I hate it's moved from 63 to 82
Yeah, top performing stock in the S&P 500 last year, up 23% on earnings.
with one of the best CEOs in the world. Absolutely an American patriot, understands basically common sense with the greatest product in the world. He knows it. And look at the numbers are on the table now. The numbers were not there a year ago. The personality of the stock has improved greatly. It was a $20
Absolutely.
stock. It was all over the place.
Hmm. Great points there, Jim. Okay, so we talked about deliveries. So why don't we switch back to Kava? You're giving Kava another chance here. It sounds like, Jim. It's back above the 50-day. So you like it again.
So I was calling it out at the lows, not to be bought, but on the weekly, it had at least 2 or 3 weeks tied to the dead low.
Hmm.
And I
Good.
wrote, this is a bottoming occurrence. Up the right side, I added a little. I'm still holding it from, I
You
don't even
hedged
know
it.
where.
You
I
yeah,
did have some.
you hedged some.
Yeah. I endured the earnings reversal down.
Yeah, that was not fun.
This stock wows me in that the management is, again, I should have a management wall of fame. The CEO of this company, Elon, a lot of people, a lot of the top stocks you'll see have unbelievably good management. And the CEO or the chairman of the board founded Alban Pan, was the CEO of Panera. He gets it. Okay. An asteroid could come in and ruin this story like salmonella, but he's seen almost everything. He's got a great track record. The
Hmm.
product is phenomenal. The lines are excellent. The food is great. And what's the count? 99
It's back to a
running up the right
99.
side. Look at the volume bars in the last 4 days. Upside, upside. I think it goes to 150-ish, digests. Hopefully we get a meaningful handle there. And I see their target is 1,000 stores by 2030. That's a bunt. This is one of the highest compounding growth rates for a retail restaurant. And the sector of retail is loaded with monsters.
Mhm.
Brothers Coffee.
Yeah.
Uh, Texas Roadhouse looks like it's bottoming. EAT, Brinker.
Yeah, this one.
And
It's
here's the thing.
phenomenal.
At the breakout at 73, I was writing about it and I was underwhelmed because the prior quarter had 1% earnings growth,
Yeah.
3% sales growth. I'm like, I
Right.
need more horsepower. And
There's a story here.
the lesson is price knows the future,
Mm.
or it gives you clues. GoDaddy, same thing. When it first came out of weekly, it comes out of a gargantuan base,
Yeah.
gargantuan. The numbers continue to be soft, but this is also, I heard the unbelievable AI story these guys have. Follow price and RS and volume more than rhetoric and fundamentals. If you have an unbelievable setup and power, lean
Mhm.
into that. Try to figure out what the story is, because the numbers, the stock will start to move often before the numbers will be seen. But I
Mhm.
want everything, and that's why I passed on them.
Yeah. And this one, Kava got ahead of itself. It had that extension, had that terrible fade. So this is what you don't want to see on earnings, right? Um, and it sat out for a while. I mean, if you're talking about relative strength, this one was out of favor. I dumped it when it broke the guardrail, Jim,
You're
because
smart.
during this time, I wanted to rotate my money into something that was at least I felt like had a better chance of making some progress. I don't trust it yet. I love retakes of the 50, but I'm waiting. But I love the story here. I love the food for sure.
Super legit, selling the 50-day guardrail break. I am trying to traverse to a more longer term view of things.
Yeah.
Um,
You've
I
been very open about that and looking at the Starbucks monthly and the Chipotle
yeah,
monthly and yeah.
I just want to sit down in this thing and let it marinate like a 2000 California Cabernet. Drink it about 10 years after you get it, and the possibilities here are huge. Same with Brothers.
Mhm.
Um, and by
Been
the way,
acting so well since that last earnings report.
history is loaded with restaurant retail concepts that make TMLs. I mean, McDonald's. I mean, Starbucks. There's a lot of them. Again, you need to go back 50
Yeah.
years,
Yeah.
and then
We're past the peak of the story here for some of these, but you bring up a good point. Every market cycle, it does seem like there's at least one restaurant related name. Okay, so let's look at Kava. We've got, I think, two more here. Tesla, full disclosure, I own it. This was a tricky one of those ones after earnings. Hey, it jumped up out of the gate. Maybe it was the day before was the earnings, but faded some by the close. This one testing recent lows, Jim.
so this was a stock that they missed on every. If there's 8 metrics on earnings, they missed on 7 of them, and the stock went up. It didn't go down.
This is the story stock of all story stocks.
This is it's not actionable here to me. Over the 50-day, maybe a little bit, but 440 is the first big pivot. That's for me. That's where I need to have serious size built at that point. But when a stock goes up on bad numbers, basically Elon Musk said this company has nothing to do with cars. It has a little bit to do with autonomous, but it's humanoid robotics is a 10x opportunity over autonomous driving. And then he said, I see a roadmap, although it will be bumpy, to 10 times the market cap of the Mag 7, which is a $30 trillion market cap, the biggest company in the world. And now he is overpromised a lot of things and he's been delayed in delivering them. But with this right here, not actionable. Over 440, the market believes them. Please, can we look at the weekly? This is a
Yes.
beautiful pattern. And maybe even the monthly.
I'll zoom out. Is that better? Is
Yeah, you
that
do a
enough?
great job of running and also reading my mind where I'm going next. I see you drawing lines down there.
Yeah.
This stock is born again. After the climax run in 21, I was like, this stock is dead to me. I have no
Mhm.
interest.
That was really bad.
It was and this is one for the record books. Only 2.7% of all TMLs after they top recover. Now, this
Mhm.
one's recovered from 2 climax runs, and
Yeah.
it's attempting it again. I don't know if I've ever seen it in my lifetime, but I don't know if I've ever seen a CEO like Elon Musk with the innovation and the risk to do again, CEOs,
Yeah.
leadership matters. If you got it, I'll leave it at that. This stock looks great to me over 440.
Yeah. And 400 going back seems like a key level as well. And then, as you said, zooming in 440. Okay, we'll keep an eye on that. Elsewhere, I think this is the last one. Spotify. This one and Dash are the two sort of non AI leaders in my portfolio right now. I've been in this one also going back to last September, and I love the relative strength as of late.
So Allie, if they traded at 346 and lost $4 in 2020, and they're expected to earn 962 this year, where could it go? This stock is a 99 comp, unbelievable fundamentals. I listen to Spotify all day. If I'm awake, I usually have it in the background. Accumulation, insiders own 20% of it, wall of blue volume accumulation, skyscrapers of blue accumulation. I mean, it doesn't go down. It's a basketball underwater. What's up to down volume? 2.2, RS
That's big.
96, comp reading 99, liquid,
Hmm.
super liquid, and the estimates are monster.
Yeah.
50, 58, 56 or 8% with a market cap of 100 and $111 billion. This is an institutional darling. It must be owned. If you're running big money, you've got to own this. You've got to own Dash. And you're already probably in Tesla, but you're going to build that one too coming out.
Hmm. Are you talking about me personally, or are you just talking about in general?
I think big institutions,
No, big institutions.
but I
Just
mean,
lumping myself in there with them.
there's very few stocks that possess this perfect matrix of variables that the market blesses. The market has blessed these names. They're not in horrible nosedives.
Hmm.
Okay. I mean, there's a lot of stocks that have great fundamental and technical metrics. Not technical, fundamental, but they're in a downtrend until the market blesses them. They're no-go zones. And these are rare occurrences. And you don't see merchandise like this very often.
Yeah. All right. Well, it looks like the earnings is coming out tomorrow morning. So that's going to be another tell for us how it responds to earnings. So keeping
Very
an eye
well.
on that. All right, Jim, let's wrap things up with your perspective on crypto. Of course, we don't have the actual Bitcoin chart here in Market Surge at the moment, but we do have IBIT. That's the closest thing to it. And always got to disclose what we own. I am still in IBIT, and what a shakeout day today.
Yeah, but it closed up. Or GBTC, FBTC did. It's in a perfect, and on the regular chart, it's in a Darvis box. It's just in a Darvis box.
I'm
The
saying it showed a lot like bullish to me. I mean,
Yeah, that's a huge
that was great.
accumulation day.
Very
And
bullish action today.
extremely bullish, and people were flipping out over the weekend. It's critical to understand when equities are closed and there's risk off in the weekend, currency markets are the only thing open. And Bitcoin's the only true market in the world. There's no intervention. There's no one. It's open all the time.
Yeah.
And people went risk off. People who have no interest in crypto were shorting it because it was the only place to go to dump risk. And they are regretting it deeply today. They don't understand the halvening cycle. They didn't know that the Czech Republic talked about putting billions of dollars worth on their balance sheet last week. We have 7 nation states that are now having crypto on their balance sheets. I think 14 states in America are talking about putting on their state balance sheet. I mean, that was an impossible pipe dream
Mhm.
7 years ago when I opened my hedge fund. You couldn't even find anybody to take it anywhere. It was all for drug dealers and illegal things. It's come of age. It's time. And the inflows to ETFs are ramping. I think 5 billion came in last week. There's a strong pivot point right here.
Mhm.
And we shook a lot of people out recently,
Mhm.
which is right. I love to see it right before a breakout.
There you go. I mean, so going back a couple months, we had that breakout early November. That was sort of a wild horses moment to you. You were saying before that happened, you were chomping at the bit for that breakout to happen. And now, we have this $100,000 milestone. I feel like we're probably roughly trading around that level here, Jim. But a new setup for
The
traders for crypto.
100,000, I was all ramped up about the world's largest Livermore pivot point, large number pivot point, and it was maybe overhyped. And when it didn't
Mhm.
explode to 130,000, people got disenchanted and they let it go, and that's created this bigger, longer base. And I again, it's very important to understand. I am drinking the Kool-Aid. I am all in. This has changed my life. So I'm not quite as objective as others, but I would say the odds strongly favor a breakout to the upside. It's that time in the halvening cycle. It's holding its parabolic curve up. And do not be shocked if Bitcoin goes. It's a chip shot to 135,000,
Mm.
but it's not unthinkable we'll hit 180 or 200 this year. It would actually be a historical disappointment. That would be the look at history and post halvening rallies. If it hits 200,000, it's going to be no one could go, oh, how did that happen?
Right. So yeah, Jim, we know you've had crypto exposure for a very long time. So bullish here on the story. And I think so you admittedly come from it from your perspective. And I think even as an active trader who's following the IBD methodology, I think this is one that you use the technicals and the story to drive that decision process. Is this one that you're going to treat the same as a Spotify or a Kava? I think you have to treat it a little differently. It's a different beast. I think it is a measure of that risk on mentality in the market. So I think this is one where, size appropriately, get a good entry, and then be patient with it. That doesn't
So
mean hold it for a big loss, but if you're up on it, be a little patient with it. I think today is a great example.
in my equity fund, I do have a position and I treat it very much so technically.
Mm,
In my hedge fund, crypto hedge fund, those are, I call it, it's kind of like liquid venture. And I'm far more of a diamond hands sitting in
yeah,
that. I've sat through unbelievably bear markets in there. But in my equity fund,
great.
I will trade this very technically. If it breaks down, I will dump it.
Mhm. So here's one way to visualize that for our audience. Here's GBTC. We know it's not trading in lockstep with Bitcoin, and this chart only goes as far back to 2015 here, but I mean, what a move over that time.
And what a handle just below 60. That looks beautiful. It looks like Netflix on a daily right
Mm,
now. Um, yeah, I and by the way, if you look at average daily users of crypto, wallet activity, wallet creation, um, stable coin creation. I was talking to the CEO of Tether. He's like, Jim, this was about 3 months ago. It was in New
okay.
York, whatever. He goes,
Yeah.
yeah, we created 30 million wallets last month. I mean, the rate
Wow.
of adoption is exploding here.
Mhm. And then you
Um,
have other ways to access it for lazy people like me who just wanna buy the ETF.
yeah.
That's democratizing it, right? And more big names in the finance world are getting on board, and more accounts are getting exposure to this asset class.
Well, BlackRock is encouraging people to buy it. They're saying, oh, 1%, 2%. And BlackRock is like, well, if you don't have the cash, we'll lend you money against what you hold to buy it. And they have the largest ETF.
Yeah,
Fidelity's in it,
that shares
Templeton's
their
in it,
ETF.
ARK is in it. I mean, Wall Street sees opportunity and they're bringing the product. Like you said, they democratized it. They made it
Yeah,
easy.
right.
And it's a great trading vehicle for short-term people. But I think the store of wealth story is super legit.
Yeah, well, yeah, we'll see what happens with that. And we'll also have to see what happens with this chart. But fantastic stuff. Jim, anything to wrap us up with as sort of like a look ahead for February, earnings season? That drum beats on. We have a lot of twists and turns. So, your thoughts for traders as we dive into February?
We have a golden setup, a Goldilocks setup in the economy. It's almost it's very, very rare that the Fed's like, well, it's not too hot. We're not going to raise. It's not too cool. We're not going to cut. It's just perfect right now. We have almost no rate cuts, 1.5 cuts through the balance of the year. There's 8 trillion in money market. We have an AI innovation revolution occurring with crypto, with autonomous driving. I mean, I've never seen a situation like this in my life. It's the tastiest cocktail ever. The opportunity to make money has never been greater. And I just think,
But you still got to be careful.
oh, for sure. Like risk management, job one, always. There's no excuses. Okay. If you're not stopping your losses, you're gonna get wiped out for sure. 7 of 10 of my ideas I lose money on. But we are in a target rich environment. The golden goose has never been stronger. And America's kicking ass all over the place. Top Mag 7, all US companies. Like, what are we afraid? France is going to come out with an AI model. France is dying. It's America all the way. And the opportunities right now are better than anything I've seen in my 40 years. The setups, the opportunities, the fundamentals, the fuel and money market, absolute and relative has never been bigger. And if you're using CanSlim, you are uniquely suited to capture this. CanSlim was made for this type of thing, exactly made for it. That's it.
Good stuff as always, Jim. We appreciate it. And we'll see you back here next month, my friend.
Look
Thanks
forward to
again.
it. Take care.
All right, everyone. That is it for this month. We really appreciate you tuning in. Thank you so much, as always. It is because of our audience like you that we have so much fun and get so much out of doing this every month. So, thank you, as always, for your support. And my thanks to Jim again, founder of the Roppel Report, for fantastic insight, as always. So, we'll see you back here next month, everyone. Thank you so much again for tuning in. See you then.